Have you ever looked at your bank accounts and thought, where's all my money? You know you've done the work. You've sent the invoices. The profit and loss statement says the revenue is there, but somehow the bank account doesn't seem to agree. And that's one of the frustrating realities of running a business. Sometimes the problem isn't the lack of sales. It's that your money is still sitting in someone else's inbox. Late payments create more problems than most business owners realize. Because when customers pay late, everything else still happens on time. Payroll, rent, insurance, and your taxes. Those bills don't just wait because your customer dies. And eventually you start feeling pressure, not because the business isn't profitable, but because cash is trapped. One of the hardest lessons business owners learn is this: an invoice isn't money, it's potential money. And potential money doesn't make payroll. The revenue may be real, but until it's collected, the cash isn't available. Sales don't pay the bills. Collected sales do. Red flag number 1, your payment window is too long. One of the first places I look when cash feels tight is accounts receivable. How much money customers owe you and how long it takes them to pay. If your average invoice takes 45 or 60 days to get paid, you have a timeline problem. Some warning signs include invoices piling up past 30 days old, spending more time sending follow-up emails than doing the work, and feeling nervous every time payroll gets close. Every extra day that money sits in accounts receivable is another day that it isn't working for you. And red flag number 2, you're financing your customers. Most business owners never think about it this way, but when you complete your work, pay your team, pay your vendors, and then wait 2 months to get paid, you're effectively financing your customers interest-free. You're carrying the financial burden, and over time that burden creates a lot of unnecessary stress. Some industries naturally have longer payment cycles. Medical practices are a great example. If you're waiting on insurance reimbursement, you may not have complete control over how quickly money arrives. And that's important to recognize because the goal isn't always to make collections instantaneous. Sometimes the goal is simply to understand the timeline and plan around it. Maybe that means monitoring aging reports more closely, following up on claims promptly, verifying insurance information up front, or maintaining a cash reserve to bridge the gap. Because even when you can't control the timing, you can still manage the process. And understanding the process creates better decisions. Most people think getting paid late only delays income, but it often creates additional costs. Maybe you're using a credit card to cover expenses and paying interest. Maybe you're delaying key purchases. Maybe you're passing on growth opportunities because cash is tight. Late payment doesn't just affect your bank account, it affects your decisions. They create hesitation, they create uncertainty, and uncertainty makes it harder to plan. Sometimes small changes to how and when you get paid can make a huge difference. So strategy number 1, getting paid earlier. One of the easiest ways to improve cash flow is to shorten the amount of time between doing the work and collecting the money. That might be moving from net 30 to net 15, or using due upon receipt, collecting deposits before starting your work, breaking larger projects into milestone payments, because the shorter the window, the faster cash gets back into the business. Strategy number 2, sending invoices immediately. The longer you wait to send an invoice, the longer you wait to get paid. Make invoicing part of completing the work, not something you get around to on the weekend. And then strategy number 3, give people a reason to pay quickly. Offer a small discount for early payment, or require a deposit before work begins, because cash flow improves when money starts arriving sooner. And strategy number 4, make payment frictionless. Sometimes customers don't pay because it's inconvenient. Offer ACH, credit cards, or direct online payment links. Remove the friction. Now here's the question. If every outstanding invoice was paid tomorrow, how different would your business feel? For many business owners, the answer is night and day. And that's the ultimate proof that the issue isn't profitability, it's your timing. Revenue matters, profit matters, but cash matters too. Because sales don't pay the bills, collected sales do. And the faster you collect those sales, the healthier the cash flow becomes. Sometimes improving cash flow isn't about finding more customers. It's about shrinking the time it takes to collect what you already earned. But sometimes, even after every invoice gets paid on time, there still isn't enough left. which raises another important question. Am I charging enough? We'll talk about that in the next video.